if you've been in the market for like even 10 years, you really get to understand that crashes in the end are just an opportunity.
He says, what I would tell any entrepreneur that thinks they're going to disrupt, you have to be 20 times better, at least.
If you're lucky enough to be like cold-blooded, almost like completely rational, you really have a massive edge. Even if you started investing like 3-4 years ago, you still saw like declines because of like Greece or Chinese US trade wars, COVID, and now inflation and war with Ukraine. Like, so I think that even newcomers are learning. Of course, if you've been investing for longer periods of time, you do have a massive edge. Being long term and being able to withstand these crashes, being chilled. That's why I
Is
say,
that true? Is it actually possible to be chill?
Yeah.
Really?
Like
How chill are you?
I don't know. Maybe it's been the years, but I'm completely chill. Actually, I get excited.
No.
Like when markets go bad, I get excited, and because for me it's a chance to double down on great companies. Like for me, it's like, oh my god, I can get this company, and I don't know, price to free cash flow of 7. It's like, how is it even possible? Like you pay 25 and you're getting it for 7.
Exactly. Well, this is some stuff that Arnaldo's helped me understand a little better in terms of the ratio. And I said, I'm ready for a crash or correction. I'm expecting it. I never feel like there's enough cash. So how do you navigate that? Because I know Arnaldo doesn't like this to stay cash heavy. You know, he's more invested, and he considers his Apple position as his cash balance. But I couldn't do that. I wouldn't be able to. I don't think so.
I think he learned that from the greats. There's many, like even Buffett and Munger always hold stuff as
I actually learned that from you.
Well, I wish I still had Apple. But it's, of course, the cash, the whole, oh my God, how am I going to support, how am I supposed to behave in crashes, and how much cash do I deploy? How much cash do I deploy? When the market gets expensive, what do I do? Do I sell stuff? Do I go full cash and so on? I think it really comes down to preference. Like Buffett or Munger always say that there's no like secret formula that says, oh, stay 20% cash, stay 5% equity, and so on and so on. So I really do think that it comes down to preference. Like, and the market, it's really all about how much time you stay in the market. So I think that you should put yourself in a position that makes you, from like the kind of person you are, like how your emotions make you behave, stay in the market as long as possible. So let's say you want to stay in the market for 60 years. If the way for you to stay in the market 60 years is to have always 30% cash, so be it. 30% cash. Like, you don't have to always, at least from my point of view, you don't always have to look for the alpha or the maximizing the returns and so on. Because even when you try
I'm more like that.
Exactly. Try to maximize, you're more likely to do more mistakes. So at one point, it's like you have to have the perfect discounted cash flow, or you have the perfect timing of the market, or the perfect percentage between equity, bond, derivatives, commodities, and cash. Like, I think the thing that lets you stay calm is the thing that's make you want to win. Now, for deploying though, it's different. Like, if you have cash and you want to deploy it, I think being patient is literally the key to win. Like, it's very rare. Even the best investors really rarely invest massive positions of their cash in one single moment. Like, you've seen, for example, Buffett build position in like years. Okay. So like, why do you do this? Because you pretty much do not have a crystal ball. So you can't really predict if the company stock will go up or will go down. You just keep buying every month or every 3 months or every year, and without, of course, deploying everything at the same time. So
even when the valuations are so low, like now?
Of course, if the valuations are super low, personally, I invest more aggressively. So, of course, let's say an example, Apple, simple metric that everyone knows, PE, price earnings. Let's say Apple is a price earnings 40. Personally, I wouldn't invest. Price earnings is 20. Probably I would start investing, but not heavily. It goes to 10, I invest heavily. Of course, even when it's at 10, I have no rush of deploying all my cash. It could go to 5, it could go to 15, who knows? But if I do it over the course of some months, I will either get the average at 7.5 or at 12.5. So my opinion is always be kind of
calm. Yeah. I don't have that at all. That's for sure. That's one thing I have for sure. That I feel like I said, oh, okay, I know it's the right answer, why am I gonna wait? Just put it, because if it rips and I miss it, then I'm gonna feel stupid. But then obviously
Yeah,
that rarely happens. But
yeah,
yeah, no, the
that's the
patience
fear
is
of missing
definitely key.
out.
Exactly.
It's
I should
literally the
stop
fear of missing
operating
out.
with that. I think that's my key go to, and I better stop it because.
No, but I do really think that it literally, like investing, at least from my point of view, it's really simple. Like it's not rocket
Mm,
science, but the hardest part is by far, and I mean by far, managing your emotions. It's like it means like managing your emotions when it goes up, when it goes down, when it goes sideways, or when it stays stuck in a bear market for 5 years, or when it's
yeah.
like skyrockets or nosedives. And once you actually are able to stay calm at all times, so you actually can abuse the market, like you can literally turn into your slave. This was stolen again from Buffett.
Wow.
That's where you're gonna excel. That's literally when you're gonna excel. So if tomorrow Palantir goes, I say Palantir because I know you guys like Palantir. If Palantir goes tomorrow goes from 40 to 5, it should be complete chill. Like the company is still compounding at 30% a year
Yeah.
cash flow.
Yeah.
The business is doing completely fine, and you're long term, of course, and you're like trading, you're gonna be fine. Just stay calm, buy more if you can, and yeah.
So then, do you eliminate the possibility? Like the other day, obviously, I think 2 weeks ago, 3 weeks ago, there was like, it was in bad shape. Everything was like in pretty bad shape. And then the thoughts start coming in my head. I say, oh, maybe this is going to be a major recession. Maybe the housing market is going to come down. Maybe there is going to be a Chinese invasion. Maybe the politicians around the world never want the market to recover. Sometimes I think, and it's probably the wrong way to think, but sometimes I'm like, oh, maybe this is the one, and this is going to be the story that my kids are going to talk about like for generations. Like, oh, maybe this is the end, Do you ever have those thoughts, or I guess to practice what you're saying, you have to ignore that completely or not believe it at all?
Okay, so I do ignore it. I always say that like sometimes people say, oh my god, there might be a third world war, China and Russia and who knows, like if a third world war happens, it doesn't matter what you're holding.
Yeah.
You could have cash and it will be useless. Like if someone like I would advise, for example, everyone to read The Dying of Money about like a German recession. Like money or Venezuela, it becomes completely useless. Like literally paper to
Yeah.
light on a fire.
Yeah.
So if something really, 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 really bad happens, don't worry. Like you're not gonna be thinking that, oh my god, I had
Yeah.
500,000 invested in stocks and now they're worth like no.
Or even more. Or sorry to interrupt, but that's a fear of, like, if you have a lot of money, that now you're more responsible for something. So let's say someone with, let's say, call it 3 million or 4 million or 5 million, and then you're like, oh man, I just lost 2, 3, 4, 5. I could have bought like a super yacht or 3, 4 Ferraris. And that I find is also heavy. But I'll let you continue. Go ahead.
But you invested in Palantir.
Yeah, but the market doesn't even exist anymore. They delisted everything in this situation, right?
No, but like I don't really like this kind of things. They don't really influence my decision, honestly. Like if it's something that I can predict, like at all, I don't really let it affect me. Like even when people are like, oh, inflation, interest rates, will they go up? Will they go down? Oh my God, if inflation is so high, we're gonna have to raise interest. Like, yes,
Recession.
maybe, who knows? Recession. Even recession is like, actually, I think that recession is where most of us would thrive. If it's just a recession, of course, it's like World War, it's different thing. But if it's a recession and you find like literally companies being traded as penny stocks, at least it's where I would literally wreck up the market. Like I would buy everything I can. But like there has been many recessions in the past, and somehow we always survived it. So I do think that as humankind, we're kind of anti-fragile. Like we know how to survive these kind of situations, and that's also the moments where the most wealth is built. So I do think that actually even a recession would be an opportunity for us. That being said, you can correct me if I'm wrong, but Home Depot was like at 70, it went down to 7. That's where Lynch bought, and then it went to 1. Like imagine seeing your portfolio like being pretty much wiped out, and then the stock literally climbed to all-time high. Like now it's one of the most, like they produce the most returns for so many investors. But the point is, like even if tomorrow your companies go at 1, like unless something really bad happens, like we're literally all gonna die, so that's not your problem. you're gonna be fine. Like you just, if you can withstand it, you're definitely gonna be fine.